The broadcast is now starting. All attendees are in listen-only mode.
Hello, today we are going to cover HSA Essentials to give you a better understanding of choosing an HSA compatible health plan during open enrollment. We have all thought about retirement at some point and in some capacity, but have you thought about how much it'll cost you to pay for healthcare expenses? Fidelity released research in April of 2019 stating for the average married couple retiring at age 65 in 2019 will spend $285,000 on healthcare expenses in retirement. We see how that $285,000 breaks out by gender. But what about the costs that are not covered by Medicare? Those are additional costs to the $285,000 estimate. The cost of healthcare is expensive into retirement and is something we all need to start saving for, whether just starting out in our career or nearing retirement age. So what does this have to do with an HSA? A health savings account, also referred to as an HSA, is a checking account you can open when you are on a qualified high deductible health plan. An HSA offers triple tax savings. Think of it as a 401k for medical. An HSA is the only retirement-like account available today that has a triple tax savings. The funds belong to you, the account owner. Unlike an IRA or 401k, you are never taxed on the funds when withdrawn for paying for qualified medical expenses. Unlike an IRA, funds can be accessed at any time to pay for qualified medical expenses, and there is no forced distribution. Unlike an FSA, unused funds roll over year after year, and since there is no forced distribution, there is the ability to build up a balance that can be used in the near or far future. To reiterate, an HSA account has triple tax savings. All contributions made via payroll to your account are pre-tax dollars. Additional contributions made outside of payroll are tax deductible. Funds in the account earn interest and grow tax-free. You are never taxed on withdrawals made for qualified medical expenses. Note, prior to age 65, if you use HSA funds for non-qualified expenses, you can be subject to a 20% penalty in ordinary income tax. The money belongs to you. If you change employers, the account and money stay with you. If you change healthcare coverage, the funds in the account are yours. You can continue to withdraw for medical expenses but can no longer contribute. Funds roll over year to year so you can grow a nest egg for medical needs. The IRS has some rules on who is eligible to open an HSA. You must be covered by a qualified high deductible health plan on the first day of any given month. You cannot be covered by another health plan. You cannot be enrolled in Medicare, and you cannot be claimed as a dependent on another individual's tax return. Each year, the IRS releases contribution limits for HSAs. Depending on the category you fall under, you will see the contribution limits listed for 2020 and 2021. If you are on an eligible HSA plan in 2020, you have until April 15th of 2021 to make a contribution for 2020. Any individual 55 or older is able to contribute an additional $1,000 known by the IRS as a catch-up contribution. This is very important. Who do the HSA funds cover? You, the account owner and primary on the insurance plan. Your spouse, even if your spouse has coverage through his or her employer. Any individual you claim as a dependent, even if they are not covered by your health plan. Also, if you have a family coverage, any child that is not a dependent but covered by your insurance, age 18 to 26, can have his or her own HSA and contribute the family maximum to it. When you go to the doctor for imaging, blood work, etc., you do not pay at time of visit. You want the service provided to run through the network, so you receive the negotiated network discounted rate. You will receive an explanation of benefits, otherwise known as an EOB. Your provider will receive a copy of the EOB outlining what was covered by insurance and what you are responsible for paying. Your provider will send you a bill for the amount not covered by insurance. To pay the provider, you can use your HSA debit card, bill pay via online banking, or write a check. You can also choose to pay out of pocket and reimburse yourself at a later date. You must save receipts for expenses you reimburse yourself for. Provide the pharmacist with your insurance card and prescription. You will get a network discounted rate on the retail value of the prescription. To pay for your prescription, you can use your HSA debit card or checks, or you can pay out of pocket and save the receipt to reimburse yourself at a later date. Here are some examples of qualified medical expenses: prescriptions, dental and vision, including LASIK, eyeglasses, contacts, braces, etc., doctor's visits and deductibles, but not your premium. The IRS website contains information that outlines what is considered a qualified medical expense. The link to the IRS listing can be found on Inland Bank's website. Here outlines the few times you are able to pay for premiums with your HSA dollars: long-term care insurance, COBRA, Medicare, coverage while receiving unemployment, and continuation of coverage. So why Inland Bank? We offer one health savings account at Inland Bank, the HSA Advantage. Our HSA Advantage account has no monthly bank fee, no minimum balance required to maintain in the account, and any balance over $250 can be invested into mutual funds if you choose. If you choose to invest your HSA dollars into mutual funds, this can be done via our third-party provider, My HSA Investments, which is powered by Devonair. For more information on investing your HSA dollars, please visit myhsainvestments.com. Your Inland Bank HSA account is interest-bearing. Again, there is no monthly bank fee and no minimum balance required to maintain in the account. For employees of one of our employer groups, we will open your HSA Advantage account at a zero balance, since you will be using payroll contributions to fund your account. With your HSA Advantage account, you will receive a Visa debit card, online access, mobile app, bill pay, remote capture, and monthly statements, all at no cost. There are 4 easy ways to pay for qualified medical expenses: checks, which are available upon request since many prefer a paperless route; your HSA debit card; online and mobile banking via bill pay. There is no time frame to reimburse yourself for anything you pay for out of pocket. You can send yourself an online bill payment, write yourself a check from your HSA account, or send yourself a transfer from your HSA account to another account. Here lists the contact information for our HSA team. Please contact us with any questions. Thank you for your time today.